Welcome back. Hope you're having a good morning. Well, for starters, the gift nifty suggesting that we pull back a little bit. Global cues in a bit of a dizzy because of the Israel conflict. You have crude oil prices as well that have spiked up. But there are plenty of stocks to discuss. So let's welcome Prakash Diwan, who joins us to help us out with some fundamental analysis. So, well, Prakash, good morning and good to see you in this morning. Let's talk about Titan. You know, that came out with its update post-market hours on Friday. And the numbers look pretty good. I mean, Mangalam was telling us it came on a high base as well. Though Kalyan Jewellers, those numbers look much better, but that stock price as well has more than doubled. What's your view on Titan from here on?
Good morning, Nigel. Really nice to be on the show. The Titan numbers tell you a very different picture than what expectations were building up. I mean, Kalyan Jewellers, of course, started tempering some of those expectations of muted, quarter, given the fact that you had this Adhik Maas impact. But the Adhik Maas seems to have actually added more business for some of the, verticals that Titan has, particularly the likes of CaratLane. So what I think these numbers tell you on a second order thought process is that given the way the company's expansion is happening, distribution is happening, there's a new segment that they have started catering to, which possibly is not very sensitive to these specific days and periods or months where not to buy jewelry or go out shopping. So interestingly, the trend towards buying high-end jewelry or gold particularly, and of course the fact that most of these companies have started becoming very significantly design-oriented rather than just the basic commodity orientation they had. I think Titan will probably be able to reset itself in a very different growth trajectory given its all-round growth from various verticals. I mean, I was happy to see even eyewear see such a decent growth. So as travel goes up, as people kind of start looking at that as a necessity and not just a luxury, things will change for them in the long run. Well, the stock hasn't fortunately done so dramatically well as some of the smaller ones have done in the jewelry space, but then it also has always been traded at a premium, so you would have to accept that. My sense is that the PEG ratio for Titan probably is looking far more reasonable than it did, let's say, 6 months or 12 months back. But at 3,300, you'd probably be not going to get rewarded so amply. So this is a stock that you buy on bad days again. It's definitely something which a lot of people don't have in their portfolio given its high value or the high premium valuations it trades at. But this is the time to accumulate companies like this for the long run for stable portfolio performance. But I mean, you could debate on the valuations, and some days you would get. So it's a Bajaj Finance, it's a Titan, whether it's a Reliance. All of these will have their share of valuation discussions and debates. But definitely from a growth perspective, these numbers tell you a very different, robust picture emerging in the next few quarters.
All right. The other stock I wanted to discuss with you, and one, of course, that has been well identified by the street is Solar Industries, right? It's had a rollicking ride. I mean, 6 months back, Solar Industries was at 3,000. And today it's almost, 5,200. And there's this huge order that they've won, the largest ever from Coal India. So is there more scope on the upside, or do you think a lot of the run is done already?
Good morning, Sonia. So, I'm just hoping it's a coincidence that it is called Solar Industry, but it's not got anything to do with solar, which is doing so well otherwise. And this company has its own bottom-up, narrative that's kind of building up every quarter, every year. It's been, if you ask me, it's been highly valued in terms of, richly valued right from the time it was $1,200 about 4 years back, maybe 3.5 years back. But the kind of growth that people anticipated, instead of coming from the defense vertical, which is one of the biggest where they've invested capacities, the orientation has been to cater to that segment. It's actually the conventional coal mining, this area where they've always been very strong at. Now, what Coal India this order tells you is that coal is not going away in a hurry. We've seen how coal has kind of responded to this entire situation, and the geopolitical crisis yesterday, it just makes it even more stronger as a optionality. And if that were to be the case, I don't see any reason why Solar Industries, with its footprint, which is so critical for the industry, to kind of lose anything. And what's happening is, if you look at the shareholding pattern, there's a lot of consolidation that's happened. A lot of retail have booked out, and a lot of HNIs and PMSs and institutional investment, and maybe not necessarily mutual funds, but a lot of the AIFs and PMSs have actually been accumulating this at lower levels. They won't want to kind of exit in such a hurry. So there's no selling that comes in, even on days when the market is a bit shaky. So I would believe this has a huge amount of resilience, and the growth starts probably helping justify the stretch P valuations. It is expensive. It will remain expensive. It's always been expensive. But again, I mean, this. We just spoke about Titan a few minutes back. This is similar to that. You have a market leader where you really don't need to kind of worry about growth anymore. And remember, the order size, if you see incrementally, I was just going through the last 5 orders that they've received, and all of them have been actually 20% higher than the previous one, which means in the last 5 orders, they've actually grown 200% approximately. So that's the kind of strength, and they have capacities to do it. So, yeah, you could definitely look at buying it as long as you're okay paying that stretch value.
So, all right, definitely look at buying it. But of course, there's valuations that you have to consider. Got it. Another stock.
Well, let's get back to our chat we're having with Prakash Diwan. Prakash, last couple of questions before we let you go. MCX is the big mover in the first couple of minutes of pre-open, because finally they're going to be going ahead with the new platform. What's your view on the stock? It's likely to open gap up. What would you do from here? The market capitalization now is more than 10,000 crores. So it's looking actually on a valuation front a little bit expensive. Your take?
Yeah, absolutely right, Nigel. So we kind of spoke about this, that the trigger for MCX to start consolidating or getting into some favorable territory is the rollout of the new platform. I mean, we've seen them incur a huge expense, which has impaired their P&L for sure. But you'll have to also wait for this to be rolled out and see whether it kind of helps them get back those volumes that we've always built around the MCX narrative. And remember, the BSE launch of a lot of commodity derivatives is a big, threat. It's not something which you could take lightly, given the fact that it already has a significant presence, and it's making that kind of, options salience that it has started seeing in the last few months roll out to the commodity side as well. So my sense is MCX, it'll be a while before MCX starts getting to be well established with this new platform. So any pop that you get on the back of this sentimental, news flow in terms of a relief could probably be a good opportunity to book and then kind of re-enter after assessing the situation. But going long at this point immediately, I think it'll be a long wait. So I would not recommend.
All right, Prakash, thanks a lot for joining in. Have a good week. Thanks for stopping by. Let's